So let's get back to our chapter 3 video lecture. So for the last transaction that we covered, we have the worker corporation has a predetermined overhead rate of $6 per machine hour. So once again, they're going to assign overhead costs based upon the number of machine hours assigned to each job. So for job A, there were 10,000 machine hours in the month of April. And for job B, there were 5,000 machine hours for the month of April, a total of 15,000 machine hours. So we're going to assign a total of 90,000 in overhead cost, 15,000 hours times $6 per hour. So when you assign overhead costs, it's going to increase your work in process overhead account. So the 90,000 is shown on the left-hand side of the work in process, which is the increase side. Now for the manufacturing overhead account, it is shown on the right-hand side. So for the overhead account, when you have actual overhead, it goes on the left-hand side. When you apply overhead costs to a job based upon a predetermined overhead rate, it goes on the actual right-hand side. So in essence, notice that for the overhead account, what we see right now is that we have assigned or applied 33,000 more in overhead than the actual overhead cost that has incurred. Now, what happens is that there are going to be some other overhead costs, actual overhead costs that we haven't covered just yet. And as the actual overhead costs have been recorded, this amount is going to actually reduce. And if by chance we do apply more overhead costs than what actually took place, we then make an adjustment to the account at the end of the accounting period. Okay, so continue with this problem. Now we're saying that job A was completed during April. So that job is totally done. And job B was still incomplete. $150,000 of the cost from job A will be transferred to the finished goods account. So remember, the work in process account is for any incompleted job. So at one point, work in process had a total cost of $230,000. Because job A is now complete, we're going to take 158 of the cost from work in process, put it on the right-hand side, meaning the decrease side. We're going to put it on the left-hand side of the finished goods inventory account, which is the increase side for finished good. So in essence, we are transferring costs from one inventory account, work in process, to another inventory account, finished goods. So the work in process for a job B of $72,000 is still in the account. And then I would transfer over to the upcoming accounting period. The finished goods only shows those jobs that are actually complete. So we're saying the total cost for job A was $158,000. All right. Now, if you recall, job A was to produce 1,000 gold medallions. We're saying the total cost of job A was $158,000. Therefore, the unit product cost, or the cost per medallion, is $158. So if you think about it again, 1,000 medallions was produced at a total cost of $158. Therefore, the cost per medallion is $158. Now, assume that we sold 750 medallions in the month of April. So by the end of April, we actually sold 750 of those gold medallions. Remember, the cost to make them is $158 per medallion. So if you take the number sold times the cost per medallion, they give you a total cost of $118,500, which is known as your cost of goods sold. So we take the finished goods account, it's going to decrease by the $118,500 because once again, at first we had 1,000 medallions, but we just sold 750 of them. So once they're sold, the finished good account is going to decrease, which is shown on the right hand side. Cost of goods sold is going to increase by shown on the left hand side. Cost of goods sold, this is an expense account that shows how much we pay for those medallions that were sold to our customers during the course of the accounting period. So we sold those for $225,000. That's known as your sales revenue. But the amount that those items cost us is $118,500. So we're mainly focused right now on the cost component of it. But I do want you to understand that you will always sell it for a price higher than what you paid for it. But this section, cost of goods sold, shows how much this company, Rugged Corporation, paid, or in this case, the production cost of the medallions that were sold to their customers during the course of the accounting period. It goes into an account known as the cost of goods sold account. Okay? So for finished goods, we still have remaining 250 other medallions, and they're at a cost of $158 a piece. So if you were to just subtract out the $118,500 from the $158, you get $39,500. Or check our work. If you take 250 times 158, it'll give you the remaining cost of $39,500. So there you have an illustration using what we call T accounts of the flow of cost through a job order costing system, showing the cost going from raw materials, which we did earlier, over to work in process. It shows the manufacturing overhead costs. It shows the actual overhead costs, and later on the applied overhead costs. So once we have determined the amount of overhead that's going to be applied, it's pretty much transferred from the overhead account over to work in process. Once the job has been completed, the cost goes from work in process over to finished goods. Once the product has been sold, the cost goes from finished goods over to your cost of goods sold account. Okay? And there you have an illustration of the cost flow system for a job order costing system. I'm going to create one additional video lecture, chapter 3, that will illustrate how to prepare what's called a scheduled cost of goods manufactured. It's going to be the exact same information we just covered, but more what we call a schedule format. Okay? Stay tuned.